session will be recorded. So if you miss anything, you can kind of go back and check out the recording, or if you just want to hear the session again. But as for today's webinar, it is hosted by zoho.com/CPA. And that's the team that Val and myself work on, and accountants and bookkeepers are welcome. And if you're looking for an accountant or bookkeeper, go ahead and head on to that site, head to that website, and you'll be able to find one pretty easily. And someone who can help you out with Zoho Books or accounting in general. Today's session is presented in Showtime, Zoho Showtime. And let me kind of walk you through some of the tabs on the left-hand side. So if you look to your left, you'll see a questions tab. That's where you can ask Scott a question. And he also has Avalara Sales is here as well. So they'll be able to answer some questions specifically to Avalara. Or if you have any Zoho questions, you can shoot us a question there as well. And if you see at the bottom left-hand side, you'll see a handouts tab. And there you'll see a few helpful links for Avalara, and also you'll see today's presentation. One helpful link that I put in there was a 2021 sales tax changes report, and that was provided to us by Avalara. So go check that out if you have a chance after the session. And today's session does qualify for 1 CPE credit. And in order to receive that, you must attend for at least 60 minutes, so the whole session, and answer 3 out of 4 polling questions. Here's what a polling question will look like for you guys. And it's just asking how are you doing today? Just a simple question. Some of them, they're not really technical, and it's just kind of here for us to gauge where the audience is at. Definitely with sales tax, and Scott can kind of navigate the questions in his conversation as well. Yeah, so that's pretty much it. And I can show the results to everybody, so it's pretty useful. And lastly, at the end of the session, please fill out the evaluation if you want to receive the CPE credit. And also, if you don't need to receive the CPE credit, we ask that you fill out the evaluation because it helps us improve our future sessions. We really appreciate it. And as for Zoho speakers today, we have Val Steed, our resident CPA. And you kind of heard him speak a little bit earlier. I'll let him do a little introduction for himself.
Good morning, everyone. Sorry about the slight delay. I'd click on the mic there. We're very pleased today to be able to talk to you about sales and use tax, and especially have an expert come in here and join us. This is going to be a terrific session. My role at Zoho is actually to do kind of everything accountant and CPA wise. We're building a program here. We're trying to add a lot of great features. You'll be hearing a lot about us as we continue, because Zoho is committed to this profession and to adding applications and features to their suite. So we're just getting going in this whole market.
Yeah, thanks, Val. And Talib Bakar, he actually can't join us today, but he'll be the one who's handing out CPE credits later in the week. So kind of be on the lookout for an email from him. And my name is Nathan Rogerson, and I've been with Zoho for about 1.5 years, and I'm a part of the finance team, like I mentioned earlier. So if you've ever attended one of our sessions, you've kind of heard from me or received an email, you'll see me in the future for sure. And like I mentioned earlier, Val and myself, we're part of the finance partner program team over here at Zoho. And if you're an accountant or bookkeeper, please head to zoho.com/CPA, and you'll be able to either become an advisor. And like I mentioned earlier, if you're looking for an advisor, head that way as well. And also, if you're a Zoho user, it's great to have your accountant become a partner, because they have a few features that they won't otherwise have if they're not a partner. So go ahead and send them that way as well. So without any delay, let's go ahead and get Scott starting his presentation, because I know he has a lot to cover, and I'll let him introduce himself really quickly. And one thing I did want to note really quick is the accountants today, 100 most influential people in accounting, 2018, 19, and 20. I think that's really cool, Scott.
Well, thank you, Nathan, and thank you, Val, for letting us come in and talk a little bit about what we do, and a better way to say it is what it is the states make everybody do that we help people get done. And we truly appreciate our relationship and partnership with Zoho. It works very well for both of us, and we're excited to have this. Mm-hmm. So I'm Scott Peterson. I'm not wearing a sport coat today. not quite hot yet here in Nashville, but it's pretty darn close to summer. And at that point in time, the short sleeves come out. Been with Avalara for 8 years. Prior to that, I was the first executive director of the Streamlined Sales Tax. Streamlined Sales Tax, and I'll talk about that a little bit later, is an organization that was created 21 years ago to make sales tax simpler. It still exists, still working on that project. I don't think any of us realized 21 years ago that it would actually take 21 years to make something simple, and they're not done making things simple yet. Prior to that, I spent 10 years running the South Dakota sales tax. So my job, I was the kind of the CEO of the state sales tax, which is their primary source of revenue. And then for 12 years before that, I worked for the South Dakota legislature, and I was their tax policy specialist. All things tax in those days, less all things. Well, it's oddly enough, and I'm coming full circle in my career. So I started my career all things tax. Any kind of tax South Dakota had, some legislator or a lobbyist could come in and ask me to change. And then I went all the way to sales tax for a long time. And now I'm going back to all taxes because Avalara is becoming a multi-tax company. We just hired an insurance premiums tax, which honestly I don't know a lot about, but I'm going to get to know more about.
Yeah, so Scott, I'm going to transfer control over to you so you can.
Thank you. Oh, that's right.
Slides. And you should be in control now.
Thank you very much. So this is our agenda. We could talk a little bit about COVID, and I don't really talk about COVID too much. What we're seeing states, what we thought states would do in 2020 as a response to COVID, what we've seen them do so far this year. There's still a number of state legislatures that are working, and some big ones like Massachusetts and Texas and Wisconsin and Illinois, that are, California, states that are very influential and have a big impact on businesses around the world, and they're still working. So a little about, obviously, I wouldn't say I'm tired of talking about COVID, but the things that are, from our perspective, that are important about COVID is that it radically shifted the way we consume. And it radically shifted the way, not shifted, accelerated, in some way shifted the way that merchants sell. I was shocked to find out 2 weeks ago that the men's clothing store that I shop at in Nashville has a web store. Never occurred to me. I mean, this is the company that sells very expensive stuff to people who want it altered. And I thought, well, how in the world? I've never bought a pair of pants from you guys I didn't have to have altered. How do I do that online? And it's interesting to see how businesses have taken the technology that exists to do things like that and build it into their website and create a store that allows someone to buy just about anything that you could normally buy inside the store. What we've seen is just a massive shift in consumption to the web, and then a really significant increase in the number of businesses that have a web presence today that they never imagined that they would absolutely need. So what are we seeing in the way of states? We thought at the beginning of last year that states would be rich, that they would have lots of money to grant tax exemptions or tax reductions, do all kinds of things. And that's kind of the way last year started. In a normal year, 3/4 of the states have plenty of money, 1/4 don't have any money at all. And in that relationship changes throughout the years, that the same, other than Alaska is always somebody who doesn't have any money. But other than Alaska, almost every state has some money at some point in their, in a 10-year period. And last year, at the beginning of the year, everybody had lots of money, except for Alaska, of course. Alaska doesn't because they don't have a tax. They don't have a tax system to speak of. So we thought there'd be states out there doing things to grant exemptions. And groceries are always a big thing. And there are still, I think we're at about 15 states that tax groceries in their sales tax. And it's a pretty common thing for people to want to exempt when they have extra money. The pandemic hit and the recession started right in the middle of every state legislative session last year. It actually started before some states even started. And so that just stopped. Every attempt by every politician to grant some form of relief to someone because they had excess money. They all took the position, we have no excess money, and we're going to save every dime we got to make sure we can get through this recession. That is standard operating procedure in a recession. The first thing states do is they stop spending money. Collecting new taxes is like the fifth thing that states get to, and it's usually something that occurs mid-recession. It's never the first thing that any state legislator or governor proposes at the beginning of a recession. They never know how long it's going to last. They never know how deep it's going to get. They don't know if they're going to be as affected as their neighboring states are, because recessions don't treat all states alike. You can have a very isolated recession. Agricultural. I mean, if for some reason Brazil increases the amount of soybeans that they grow, but exponentially, well, the soybean market in the United States drops to nothing. That impacts Illinois, Iowa, and South Dakota in a very significant fashion. So farmers have a recession, and when farmers have a recession in South Dakota has a recession. So those can be very isolated. Last year's recession wasn't isolated to a particular region. It was very isolated to particular industries. I mean, everybody that could work from home went home and kept working. There were more people who could go home and work than I think any economist projected at the beginning of the recession last year, and certainly more so than any state economist projected. They projected that the world was going to end financially, and the state legislatures created budgets. So the first thing the state legislature does is stop spending money. The second thing the state legislature does is look for ways to reduce the amount of money they were already going to spend. State budgets start on July 1st, they end on June 30th. State legislatures meet in January, February, and March. So they are in the middle of, they're just past the middle of their budget year when their legislature starts. So any changes that they would normally make can only affect a small portion of their budget. So imagine your legislature starts in 1st of March and you've got a recession, you got to stop spending money in the year you're in. Well, you've already spent 3/4 of the money. You've only got 4 months left in your budget, 3 months left in your budget to affect the total year. It's very complicated. None of that happened. Nobody taxed. Maryland was the only state that expanded their sales tax. They did so on digital services, and they did so on digital advertising. Everything else was a big fail.
Hey, Scott, before you continue, I'm going to launch the first poll question.
Thank you.
To recession topic. Yeah, how has COVID-19 affected your business? And I know last year was a very tough year, and it's still proven to be a tough 2021. So, and definitely lately with the stock market, I don't want to get into that conversation, but
Don't want to get into that conversation.
Yeah.
But I want to get into that conversation because there are 2 states whose tax principally comes from capital gains. And it's California and New York. So their budgets, I said that you can have a recession in a state that's very isolated. So when there are few IPOs and there are few people selling stocks, the California and New York budget go in the tank.
Oh, really?
They are exceptionally subject to the capital gains tax.
Never really thought about that, to be honest. But yeah, so it looks like the majority of everybody is saying employees working remotely. And I know that's been a tough year. And I know a few small business owners where that was one of the biggest challenges they had for sure, was employees working remotely. And obviously a few of them said more than one, and businesses temporarily closed or restricted capacity. And I know that was a hindrance over here in Texas for sure. But yeah, so Scott, I think everybody answered, so you can kind of continue on.
Thank you very much. A saving grace for the states at the expense of every retailer in the world was the 2018 Supreme Court decision in South Dakota versus Wayfair. So economic nexus. When the recession started last year, every state but two had that law in effect. And so all those states had effectively a new source of revenue. And those states had were collecting sales tax from sellers all over the world that had never collected that sales tax before. And if you go back and look at some of the press releases that governors gave out in October and November, you'll see several of them that have said, were it not for the Wayfair decision from 2018, our sales tax receipts would have been negative. In many cases, they were positive, much more positive than many of them even dreamt was possible, given the depth of the recession that occurred last spring. So today we've got 44 states that have this law. Florida just passed theirs a week. I think the governor signed it a week ago Monday. And effective July 1st, if you're not collecting the Florida sales tax today, you need to call your accountant and ask your accountant, do I need to start collecting that Florida sales tax? And if so, what do I need to do before that law goes into effect on July 1st? It's pretty standard, to the extent that there is a standard in economic nexus, $100,000 in sales into Florida. If you make that in the last calendar year, then or you make it in the first 6 months of this calendar year, they expect you to be licensed and start collecting their sales tax. They have a pretty straightforward sales tax, so it's not a weird one like New Mexico or Hawaii, but it's going to be an obligation. We actually expect Missouri, which Missouri now is the only state in the country that doesn't have this law. I got an article this morning that both the Missouri House and the Missouri Senate have each passed a bill. They didn't pass the same bill, so they need to work out their differences. But it's very likely, and their legislature ends on Friday, or tomorrow, ends tomorrow. So they've got effectively 48 hours to work out their differences between those two bills and get that to the governor. And the governor's already said he will sign it when it gets there. So check your news on Monday to see whether or not that bill has passed. And if so, then every state in the country that has a sales tax will have this, plus the state of Alaska, which doesn't have a sales tax, but 110 cities and boroughs in Alaska have adopted the same thing, and they've created a single portal and a single way of filing. So here's the map as it exists today. Apologize for the color blue in Florida. I couldn't find that color, the same colors in my little spectrum. So we have Alaska colored blue because the cities, there is no state sales tax. The cities have sales tax. The cities all adopted a law very much like what Florida just adopted. They banded together. They created a little mini Department of Revenue that's for sales tax purposes only, that sits inside the Alaska Municipal League. A very unusual, very unique, frankly, a very forward-thinking decision on the part of those local governments. Not only did they take it upon themselves to create a simple and efficient way for people outside of Alaska to report and remit the tax, they're also expanding it to retailers inside the state. And so in a relatively short period of time, at least in sales tax world, we could see a day when no one has to remit a sales tax return to an individual city in Alaska. It all goes through this one portal. And that's certainly what we're encouraging them to do, because it's radically cheaper. It's radically less work. They still haven't got it done yet, but they're working on it. One thing I want to call about this slide is, I said earlier that, the standard economic nexus, well, it's standard only at the first very high level. And the high level is if you exceed a certain number of sales in a state that has this law, and every state that does except Missouri, then you have to collect their sales tax. Well, that's where the standard ends, because below that, I said collect $100,000 in sales into Florida. Well, in South Dakota, it's gross sales. In Arkansas, it's retail sales. In North Dakota, it's taxable sales. All three of those words, gross, retail, taxable, mean something different. And you have to know the distinction between that, and then you have to account for your sales according to those differences. And to be in compliance with one of these laws, you need to keep track of your sales by state. You need to know how many sales you're delivering into South Dakota and how many you're delivering into North Dakota and New York and Florida. Because that's how you keep track of whether or not you've exceeded the threshold. And these $100,000 to $500,000 in California, Texas, we call it the economic nexus threshold. Once you exceed the threshold, you make more than $500,000 in sales in California, you have to start collecting the California sales tax on the sales you make after you've exceeded the threshold. So if you go all year and you make $499,000 in sales in California, you are not legally required to collect their sales tax, and you don't have to start collecting their sales tax on January 1 of the next year. You do have to start keeping track of your sales again. And if in that year you exceed 500,000, then you have to start collecting their sales tax. And you have to do this for every state. And it's complicated when the states don't have the same thresholds, and it's complicated when they don't use the same trigger, the same definition of what a threshold is. So this has changed. Like I said, I just explained Florida and Missouri. The states have also taken the same concept of economic nexus and applied it to marketplaces. And it's different logically, in my mind anyway, than the law that they imposed on sellers. I mean, the sales tax law in this country works one of two ways. You impose your sales tax on a seller, and then you give them the choice of collecting that from their customers. And that's about half the states. The other half of the states, the law is imposed upon the consumer, the individual, with a corresponding law that makes the retailer collect it from the consumer. In either case, the consumer, the retailer has to collect and remit. In either case, the retailer has to remit the tax. In the former, it's theoretically possible that you don't have to pass the tax on to your customers. You'll want to do that because you legally can, but the state doesn't care if you don't. The state's going to make you pay that tax whether you collect that from your customers or not. In the latter version, you're legally required to pass a tax on to the customer. So in both cases, though, the tax is, there's a remittance obligation imposed on a retailer. There's a presumption they're the seller. There's a presumption they own the thing that they're selling. You know, and states long ago stopped getting too detailed in that analysis. With marketplaces, there was a presumption that the marketplace didn't own what it sold, that it was facilitating the sale of someone else's property. And that created a logical and frankly a legal dilemma for the states. How do you make someone collect sales tax on somebody else's property? They may have done nothing other than created the website, created a payment mechanism, and done the advertising, done the marketing, done nothing else. They don't deliver the product. They don't do anything with that product other than facilitate its sale. Well, that's where the logic of the state sales tax laws broke down. They didn't know how to deal with that. So somebody, it was one of the lawyers in the New York Department of Tax and Finance, came up with this idea. Well, we'll just impose the tax on the facilitator. We don't care if they sell a product. We don't care if they're the merchant of record. We don't care any of that stuff. We'll simply just by fiat, by state law, say you're the seller, and we'll impose a collection obligation onto you. We'll impose a remittance obligation onto you. So the states have taken the Wayfair decision from 2018, and they've expanded that to all the marketplaces using this concept of a marketplace facilitator. So all the states, now except for Missouri, have a law that defines a marketplace facilitator and imposes a collection obligation on them. Notwithstanding that many of them do not own the property, they never touch the property, they never see the property, they don't do anything with the property, the law makes them collect. And the states are going to expand. This is a concept that started with sales tax, But what we've seen this year is that states expanding that collection obligation to other taxes. Their E911 fees, battery charging fees, any tax that a retailer might collect that is something that's sold by a marketplace. They're now expanding those laws to other taxes, and I expect that to continue. I mean, to the extent that marketplaces sell something that's subject to a different tax, they should expect someday to have to collect that tax from their customers. In the world of the VAT, they don't. Individual countries' VATs change fairly often, and there's a lot of them, and so it's a real challenge. The more VATs than there are sales taxes, but in a lot of ways they don't change much. Where they do change, where they changed a lot last year was on the rates associated with certain products because of the pandemic. We saw some states that gave tax return and tax remittance relief to sellers. We saw that in Europe too. They would give tax remittance and tax reporting relief to businesses with their VAT. So you might have had an extra 3 months to remit your VAT taxes, or another 6 months to do that. We saw a few countries that lowered their VAT rate, but at the same time, we saw several countries that expanded their value-added tax to digital products and digital services. And we've seen them expand their tax reporting obligation to marketplaces, and then sometimes into the sellers inside that marketplace themselves. They didn't have, the rest of the world doesn't have to worry about Wayfair. The whole concept of nexus is very simple when you're selling across a country border. If you want your product to go through customs, you got to collect the value-added tax. It's not that, and so they have a control mechanism that no state in the United States has the ability to enforce. And so it's this concept of economic nexus is just, really? You want to sell in my country? Collect the tax. The big thing, obviously, was the breakup of the EU to a certain degree when the United Kingdom left the European Union on January 1. A tremendous increase in complexity for sellers selling into the UK and for UK sellers selling out of the UK. Not so much an increase into selling into the United States, although it became more complicated because we had a treaty with the EU. Now you have to have a treaty with the UK. Big difference, and it's really catching a lot of people by surprise, and how much more complicated it is now for sellers in and out of the UK to do business in and out of the UK. We're seeing a thing that's happening in the EU and frankly around the rest of the world that have a value-added tax is increased government intervention into the sales process. There are a number of countries that are trying to reduce value-added tax fraud, and they're doing so by requiring a stamp of approval from the government on invoices. So there's a number of countries out there where before you can send an invoice to your buyer for something, that has to be inputted inside a government system, and there has to be some sort of a stamp of recognition that's placed on that invoice that has to be there before that person can get a refund of the tax that you charge them. That's how a value-added tax works. We haven't seen that in the United States, but where we have seen it in the United States is in companies that use zapping software. There's software that exists that allows you to go in after a sales occurred and delete it, so you can just keep the money. It works. It has to be a cash business. That's the only place where we've seen that concept so far expressed in the United States. Let's do a poll. Is it time for a poll, Nathan?
Yeah, it is, Scott. And I was going to ask you after. Let me run the poll real quick and let people digest and answer that question. And then I would really love it if you go to that questions tab and tackle those two more
thank you very much.
questions.
Yep.
Yeah, what's going on there is there's a couple of questions related to services. Now, I'm going to kind of tell you folks what I understand of this back when I stuck my nose in all this, and then Scott can correct it. But services, like any service you provide to anybody anywhere in the United States, is taxable depending upon the laws in each individual state. Remember, all the stuff we're talking about today is destination taxation. So if I'm in Utah and I do work for a company in Missouri and let's say Montana and New York, okay, even though it's a service, it's not a product, it's a service, it's a little different product. I've got to find out what the laws are in Missouri and New York and Arkansas, Alabama. I've got to find out because some of those states, those services are taxable, some are not. Now, that's where I last learned about this, Scott. You want to take off on that one?
I know. You said it perfectly. Yeah. So just a little bit more state clarity. There's 3 states that broadly tax services, and they are Hawaii, New Mexico, and South Dakota. It doesn't make any difference. Healthcare is the only service in those 3 states that is exempt from their sales tax. Healthcare, literally. You go see your doctor, the doctor doesn't have to charge you sales tax. You go see your lawyer, you go see your accountant, they have to charge you sales tax. And after that, the states become extremely selective in the services that they tax. The issue with Zoho is that they probably don't see you as a service. They probably see you as software. And every state taxes software, but they don't do it all the same way. Sometimes every state in the country, every state has a law that says pre-written computer software is tangible personal property and is subject to sales tax. So if Zoho or any software is what the state would consider to be pre-written, which means it's not customized or customizable, then it is taxable in that state as tangible personal property. There are a number of states that have gone into that and said, however, if it is electronically delivered, it's exempt. If it's remotely accessed, it's exempt. So it's only taxable if it's delivered to the consumer, the user of that software, in a tangible format, which is a very rare piece of software these days. But there are a lot of states that have expanded their sales tax to digitally provided stuff. So that was a big thing in 2019. Iowa, Iowa, Kentucky, and Tennessee in 2019 expanded their sales tax to digitally access software. Maryland did it last year. So this was a great question. Thank you for asking that. Zoho may have a sales tax collection obligation, and Zoho as a provider of something that is subject to sales tax in some states has to go through the same economic nexus analysis that I described a little while ago that would be applicable to somebody selling shoes. And the same thing with accountants. I mean, if you're a CPA and you have customers in Hawaii, New Mexico, and South Dakota, what you provide for them is taxable in those states. You now then have to go through and do the economic nexus analysis. Do I bill clients in South Dakota more than $100,000? If you do, then you have to get a sales tax license and collect sales tax.
Yeah, for sure.
Okay.
And I just want to note for the poll questions, what was the hardest part of managing sales tax for your business? And it was keeping up with changing tax laws and guidelines. And obviously that's one of the hardest things about sales tax is you just never know what's going on, because even in Texas, I think every county I'm not exactly sure how they do it, but like every county has a different rate or something. So you have to go and calculate it and make sure you're standing, obviously your tax rate is correct whenever you're selling in that area. But yeah, so thank you for that, Scott, and you can continue on, and we'll try to finish up the session and try to answer any questions later on.
Yeah, Texas is crazy complicated with local taxes. Consumer use tax. In theory, every retailer in the United States now has to collect sales tax everywhere. In practice, that won't happen. And when that doesn't happen, you still have an obligation to remit the use tax. And well, it won't happen because of these economic nexus thresholds. So there's a lot of sellers out there that'll have to collect sales tax in 5 states, but not every state. They'll sell in every state, but they won't have to because they're below the threshold. So to the extent that you buy something from someone who doesn't charge you the sales tax, you should presume that you owe the tax yourself. And if you're a business, you should presume the state will knock on your door. Use tax is that thing, in most states, it's called the complementary use tax. And the complementary part is that it complements the sales tax. So sales tax is collected by the retailer, use tax is remitted by the consumer. And businesses are big consumers. States don't audit individuals for use tax, they audit businesses. So you still have a need, even if everybody's starting to charge you sales tax on the stuff that you buy for your business, to the extent that they don't, you still have a potential audit risk. You're at risk because the states only audit businesses. And when they come to audit you, they're going to look at 2 things. They're going to look at your purchases and they're going to look at your exempt sales. That's the only thing they look at. They take it for granted that you charge sales tax, right? But they also take it for granted that you buy things from people that don't charge you sales tax. And they take it for granted that people will give you an exemption certificate that isn't accurate. So manage your exempt sales very carefully so that you don't have to pay that tax and have to fight with your customer to get that money back from them. And manage your purchases very carefully so that you know when you're not being charged sales tax, and so you can keep a record of that and remit that use tax on your return. Not remitting use tax on a return is still the #1 reason businesses get audited. Now, in theory, that'll change as more retailers collect sales tax. But if you have never remitted use tax on a return and you've never been audited, you're lucky. If you remit use tax on your return, you might not ever get audited. There's no guarantee, obviously, but it is a huge driver of audit selection. A lot of companies extended remote work, Avalara included. Everybody works from home. That's going to change at Avalara. It's going to change everywhere. And it's going to change, thankfully, it's going to change because we're not as much of a danger to each other as we have been. And we're starting to see places and businesses that are ending their remote work practice. It'll happen to Avalara sometime this summer. It'll be office by office, and I assume that's going to be the way it works. I just saw an email the other day from some law firm that said, I think it was either August 1st, no, September 1st. September 1st, they were ending their remote work practice for their lawyers. You're all coming back to the office. An issue that everybody that works remotely needs to keep in the back of their mind is that the states that, where you work is a function, where you work and where you live drive the income taxes that you pay. In theory, it's where you live first and then where you work second. But you, in both those states, get the right to tax their income, and they have to give you a credit, so the credit goes back and forth. Most states granted relief to people who were working remotely because of the pandemic. They did so under their emergency authority that's given to the governor. When the governor ends the emergency authority, which Governor Abbott just did in Texas, all those things that the Department of Revenue did to grant waivers for businesses, they go away at the same time. So if you live in a state today that you didn't live in before and you're not paying that state's income tax, keep an eye on what that Department of Revenue is telling you. Digital taxes, streaming taxes, those are clearly the future, because where state sales taxes fail is not keeping up with what's sold. No state in the country has a law that imposes sales tax on music, not a single one. They tax music, when it's delivered in a tangible format. They tax tangible personal property. So to the extent that a record or a CD or whatever it is that your music comes on, if it comes on something that's tangible, you've always paid sales tax on it. It wasn't because they taxed music; they taxed the thing. As music has become digital, states have had to change their law, and the states that did change their law, I mean, for the most part, frankly, music's not subject to sales tax in those states. Books is not subject to sales tax in those states, which is why we see legislatures imposing sales tax on things that are delivered digitally, because their tax policy changed without them actually changing it. So now they're just, in their view of the world, they're changing it back. Little industry here. What do we have? Obviously, like I said, I talked to you in the beginning. Research out there says that the pandemic accelerated e-commerce growth by 5 years. That where we were going to be in 2025 is where we ended up at the end of 2020. Certainly the case in the very few things that I buy. That's certainly my case, and we're not alone, which imposes an obligation on merchants to be able to be omni-channel. I mean, not being omni-channel is, that's a road to the poorhouse if you're a merchant. And omni-channel requires software that is very flexible. It has to be able to handle data from multiple sources. And if you're going to do a sales tax return, if you have marketplaces and you sell on your own website and you have your own stores and you sell in a variety of different ways, you got to be able to get that data back together in a way that allows you to file a sales tax return. We talked about marketplaces earlier, so I'm not going to go into them. One thing I will talk about in marketplaces is the decision by manufacturers who sold things that were store dependent, asking themselves, do I have to compete with the people that normally sold my products just to be able to sell my products? Do I have to become an omni-channel manufacturer? Do I have to have a website to sell the stuff that I normally sell to a wholesaler who sells to a retailer who sells to a consumer who doesn't exist, or to a consumer that no longer shops the way that they used to shop? Are the stores where my products are sold able to sell my products to consumers on a website? Because if I sell something to someone and they can't sell it because someone has to come through a door, then my products aren't being sold. And I've got to figure out how to get those products sold. I've got employees that I need to keep employed. And so we saw a lot of that this year. A lot of manufacturers that were saying, oh, I got to have a backup plan. And maybe my backup plan becomes my plan A, and I need to start selling things to consumers that normally would have been sold by a retailer to consumers. And of course, the whole economic nexus things really caught manufacturers off guard. Those states like South Dakota that use gross sales. Well, a gross sale is any sale in South Dakota. So if you're a manufacturer, you have a sales tax licensing obligation in South Dakota that you never imagine you have to have simply because their law says gross sales. Time for another poll?
Yes, Scott, let me go ahead and launch that real quick.
While we're doing that too, if you look over one of the questions, I kind of held it there. I believe the person is talking about, can I register to collect just sales tax and not register to collect income tax in the state? And I believe that's Laura's question. You might want to look at that, Scott, and see what you think. And the answer that I would know to that is yes, you don't need to collect for income tax in the state. When you sign up for sales and use tax, it's a whole different deal. Now, correct me if I'm wrong there, Scott.
I'm not going to correct you.
Okay, so we got that one covered.
Now should go work for Avalara, looks like.
We'd love to have you. No, yeah, this is a question. We get asked this question every day, and it's unfortunately not an easy question to find readily on a website.
Mm-hmm.
And so my answer would have been exactly yours, Val. You'll know if you have to register with the Secretary of State, because after you register with the Department of Revenue, you get a letter from the Secretary of State. So when you get a letter from the Secretary of State, you know they answered your question.
Very good. Thank you. Yeah, that's kind of the way I see that.
Yeah, so I'll give the poll another like 5 seconds or so. But really the question is, what business impacts of COVID-19 are you most concerned about? And it looks like obviously decreased revenue would be something I would be worried about for sure. And supply chain is, we've seen supply chain be an issue, and it seems to still be an issue in 2021. And obviously things that are going on right now with the ship channel, I mean, that was a while ago, but also with the gas and everything, seems like supply chain might be an issue going further into 2021 as well. But yeah, awesome. So I'll let you continue, Scott. And
Thank you.
we do have about 15 more minutes or
Okay.
so.
Yep.
So just kind of keep that in mind if we want to answer questions at the end as well.
Thank you. So this is a map of the Streamlined Sales Tax. And I mentioned before, and I take it back, and I apologize, this is a really bad map of the Streamlined Sales Tax. It's wrong in 2 different places. There's so many maps out there, it's hard to keep them all straight. But the Streamlined Sales Tax, as I told you, started 21 years ago as a way to simplify sales tax. And there were about 30 different things that the business community told the states. The states all did differently from each other. And the differences, they had to do the same thing in every state. They just didn't have to, they weren't able to do it the same way in every state. And what the business community says, if you can make it simple, great. If not, make it uniform. Because uniformity reduces the knowledge that their internal tax departments have to be able to administer tax where they make sales. So the project worked mostly on uniformity, uniform definitions, uniform returns, uniform everything. There was a little simplicity, but most of the simplicity comes from uniformity. And the thing that is, all that uniformity went into effect, frankly, 15 years ago. And what's going on today, what's continued since 2005, is a thing called certified service providers. So the way that the Streamlined Sales Tax states really help retailers today is through this concept of a certified service provider. Avalara is one. There's, I think, 5 others. What those states have done is created a public-private partnership to make sales tax something a retailer can outsource.
Folks, Scott is downplaying that just a little bit because he works for Avalara, but a certified solution provider, that is a huge deal. So if you're looking to do anything with sales tax, look and see if they're a certified solution provider. If they're not, you're not going to get the respect from a lot of these states and the help. And there's a lot of side benefits depending on the state you're in, on if they're a CSP or not. So I just want to brag on that because that's not a small deal. Okay. So Avalara also being tied to Zoho is huge. Avalara also being a certified solution provider, huge. We are really lucky they tie to Zoho.
Well, thank you, Val. Appreciate that advertising. So the big deal, there's 2 big deals. One is that the word certified and certified service provider is what the state does. They certify that the system we provide to retailers is accurate, which in theory, in our experience in practice, is nearly eliminates the fear of audits. I mean, the way those process, the way a retailer's sales system connects with the Avalara system creates almost no opportunity for error. And that's what the states care about. The second thing that they do, more importantly, in conjunction, and they do the second thing because of the first thing, is that they pay us. So if you're a retailer that's doing business in the states that are white, and Hawaii should not be white, and West Virginia should be white, and I don't know why California is white, it shouldn't be white at all. So this map is accurate, except West Virginia should be white, Hawaii shouldn't be white. Those states, and there's 24 of them, they pay us. So unless you're doing something really unusual in those states, you shouldn't have any expense from us associated with the tax that gets collected and remitted in those states. In addition, Pennsylvania decided that they thought this was a cool idea. So they picked that one portion of what the streamlined sales tax did, and they adopted that. So in effect, there's 25 states in the United States where the state pays Avalara to provide this service to you. Okay, a little bit about Avalara for accountants. And so I was very happy to hear Val brag about the effort that Zoho was putting into their relationship with accountants. And because that's part of our love for the Zoho team is we too put a lot of effort into a partnership with accountants, and we're trying to build the sales tax tools for accountants in a manner that the accountant can manage. Effectively white sourcing the concept. So imagine the world where you're advertising, you've got clients that need to have sales tax, whether it's calculation, it's return, it's remittance, and you say, well, I don't have the staff, the resources to do that. And we say, well, you could call it, John Smith CPA for sales tax and use Avalara to get that done. And we call it Avalara for accountants, and there's a lot of parts to it. It's growing all the time. I think continually evolving is maybe a better way of saying it, because some of these things, evolution, as you all know, is a pretty slow process. Includes all the state and local forms, end-to-end filing and service solutions, so calculation, return, remittance, the reporting requirements that a CPA needs to be able to do their clients' income taxes. All those things are all available. We don't do the income tax. We don't want to do the income tax. Cutting edge technology. So, we connect to over 1,000 different shopping cart systems, accounting systems, billing systems, invoicing systems. So it's almost guaranteed that if your clients are using a relatively modern one of those things, that we already have a connection that's built to that. And then you can modify. You can, if you only want to do the returns, you can do the returns. You may not be able to move the money. We'll move the money for you. Just a couple slides here. I don't want to go there because I want to leave a little bit more time for questions. It's tough to keep up with the forms. We were on my day started this morning with an hour-long call with the Pennsylvania Department of Revenue. A world-class Department of Revenue, by the way. These people are very professional. They're very open. And they were telling us about that they're going to switch to a new computer system in November of 2022. And the design of that starts in September of this year. And we said we want to be part of the design because we file 5,000 returns in Pennsylvania and every month. And we want to do that in a way that is seamless. And they want us to do that in a way that is seamless. And that conversation goes on all the time around the country. States modernize their own systems. And whenever they modernize their systems, they change something. Whether they change the portal, they make you get a new account number. All those things are to the whim of the Department of Revenue. They don't need a law to make you change your license number. They can just get a new computer system. And then as a result of that, make you change your license number, which is painfully complicated for an individual. And when you have to do it for 5,000 individuals, it's crazy. And so accountants have the same needs. All your clients have a list of account numbers and passwords that they have to manage as they file sales taxes around the United States. All that has to be done by somebody. It's hard. It changes all the time. Some of the impacts of managing aggregating information across multiple systems. Your client has 2 stores, one in your state, one in the neighboring state. They sell on 3 marketplaces, and they have a website. So this is a 5-channel retailer. And honestly, I don't think that's an unusual merchant at all. Our experience is if you sell on one marketplace, you sell on three. And you very likely have your own website because you started with your own web. You got into e-commerce on your own. You have your own website and you make sales on the website and it works for you. And you've got stores because you like to have, you have something that people want to kick the tire on. So the accountant has to aggregate all that data from all those sources into a return. You have to do it every month. You have to respond to state notices. What if the number's wrong? What if they changed you to a monthly filing? You were always semi-annual and they changed you to monthly in one state. You missed the email from the Department of Revenue, which is where states are going these days. They're going to email instead of paper. What if you missed the email from the Department of saying that you have to start filing monthly and to get a notice? You have to be able to manage that. And then just managing the returns just takes a lot of time. And especially the more if your clients are truly omni-channel, they're making sales everywhere. You add value by telling them when they need to start collecting sales tax and where they need to start collecting sales tax and getting them licensed, getting them to understand all the things that are different in state A than they were in state B. Heaven forbid, well, maybe not. I was about to say heaven forbid that New Mexico is the first state that you start collecting sales tax in, but maybe it's a good thing because they don't get more complicated in New Mexico. So if you learn New Mexico, the rest of the country is pretty simple. Then you're going to have clients that make exempt sales, and they have to manage those exemptions. And I'm going to skip down through here so we can get through to some of the questions. And I wanted to just say, make a, we're going to have Justin's email at the end.
Yes.
I want to introduce everybody to Justin Lawrence. Justin is our Zoho partner relationship guy, and he's the one that, if you have some serious questions about the relationship, Justin's the one that you should get a hold of and let him help you understand how this relationship works.
Yeah, for sure. And that's his contact information there. And if the handouts has these slides on there, so you can go ahead and save that or screenshot Justin's information. Or if you need it later on, you can send us an email and we'll be able to get that to you. And
right. And don't forget, go ahead and do your last poll there, Nathan. And don't forget, folks, that white paper handout that they sent to us is really well done. It just anything and everything you can read and continue to study about this area is going to help you. It's complex. It's frustrating. Each state has their own crazy rules. Joel and I put a few funny little stories up there, but they're true. This has got to be, as a CPA in my entire practice, my life, I've been practicing, and involved in the accounting profession and accounting technology almost 30 years. I have never seen anything more complex and frustrating than the world we're talking about today.
Yeah, for sure. And that kind of leads us to that last poll that Val was mentioning. And it's really just asking if you would like to be contacted by Avalara, and Justin himself can reach out to you guys to see your questions just for free consultations. And yeah, so let's see what kind of questions we have. If you go to that questions panel, Scott.
Could I get myself off mute? Okay.
We have a few in chat as well. But
Okay, so the question is, we are a manufacturing company that takes phone call orders for customers in every state. We were told to register in all states and remit the sales tax collected. Is it true, or should we have followed nexus or threshold? Okay, well, that's without knowing how many sales you make. I couldn't answer that question. If somebody looked at you and said, wow, you're making more than $100,000 in sales in every state in the United States, then that's the threshold. And in the beginning, back in 2018, that's what it looked like. The threshold was we were going to have uniformity on the threshold. It didn't turn out that way.
Right. Each state's different. Right.
Yeah, each state is different. But if somebody looked at you and said, well, you make more sales than any threshold, then the answer was probably the right answer.
Right.
Now, this is something that you should pay attention to, and you should have, as you go through your sales cycle, you should be looking at where you make sales and to keep up this practice of recording sales by state. Because if you find yourself all of a sudden making sales making less sales in a state than you did when you were registered, and you fall below a threshold, then after a certain period of time, that state will probably let you stop collecting. And you also need to go back and look at, since you're a manufacturer, you need to go back and look at the difference between the taxable and the gross and the retail sales states. Because if you're making sales that are exempt or mostly exempt into North Dakota, well, North Dakota's threshold is taxable sales. So if you make, $300,000 in sales in North Dakota and only 40,000 of those are taxable, well, it's the 40,000 you count, not the 300. South Dakota is the opposite. South Dakota, you got the 300,000. And you could sell the same amount of stuff to the same exact people in those two states and collect in one state, not the other, even though they both have a $100,000 threshold.
And folks, none of us really wanted all this. All the accountants I know were all like, oh my gosh, this is a no-win for anybody, except the states that are desperate for revenue because of the online sales. And that's where all this is coming from.
Yeah, definitely. Well, we are at the top of the hour. Let's see if there's anything. We'll try to. I'll see if Scott can answer one more question in the session. We see if there's one more in there.
Holly, please call Justin.
Yeah. So
he can help you with that.
Yeah, thanks, Scott. We are at the top of the hour, and I know some CPAs need that CPE credit, so we need to end today's session. But I do appreciate Scott jumping on and Avalara preparing this presentation for us, and obviously Val with your expertise in this matter as well. I really appreciate it, and thanks for everybody tuning in. And I'm just remember after I end the session, just fill out that evaluation. We do appreciate it. It helps us improve our sessions going forward. So thanks, Scott.
You're very welcome. Thank you.
Thanks, everybody.
Thanks, everyone. Have a good day.